You watch a bright green candle surge up the chart. You click buy to catch the momentum. The market instantly collapses, wiping out your position. The market is an auction. When you buy while the price is rapidly climbing, you are paying top dollar. You are taking the worst possible price on the board. Institutions with massive capital do not operate this way. They refuse to chase price. Instead, they wait patiently for the market to come to them and offer a sale. We can track this exact behavior using the ICT Optimal Trade Entry, or OTE. This is a rigid framework designed to map exact price levels where institutional order flow re-engages. Mastering the OTE blueprint allows you to stop reacting to the market's noise and start executing highly specific data-backed setups. The blueprint starts zoomed out. Before executing any trade, you must identify a high time frame directional bias using a daily or 4-hour chart. In a clear staircase of higher highs and higher lows, look for buying opportunities. We isolate the impulse leg, a powerful upward surge signaling institutional buy-in. We cut this leg perfectly in half. Above is premium, too expensive. Below is the discount zone. Executing a buy order in the premium zone guarantees a poor entry price. The OTE system demands extreme patience. You must wait for the price to fall back down into discount territory. Once the price drops into the discount area, we use the Fibonacci retracement tool to locate the optimal entry zone. Anchor the Fibonacci tool to the absolute bottom wick of the impulse leg and drag to the top wick. Ignore the bodies. This generates a specific bracket in the discount area, the 61.8, 70.5, and 78.6% levels, your OTE sweet spot. We multiply the probability by looking for confluence, finding other institutional footprints that naturally align inside this exact box. For example, a fair value gap, a 3-candle pattern highlighting a price inefficiency, sitting perfectly between the 61.8 and 78.6% levels. Time of day adds a final layer of probability. The most reliable setups form during high-volume trading windows, like the New York Open. The OTE zone is simply a highly concentrated area where discount pricing, algorithmic retracement levels, and historical orders overlap. But touching the edge of the OTE box is not a buy signal. Entering blindly the exact millisecond the price hits the line leaves you vulnerable to catching a falling knife. As the price bleeds down into our zone, we shift our perspective. We zoom aggressively into a lower time frame, like the 1-minute chart. This microscale chart shows the exact trigger we need, a market structure shift. This occurs when the short-term downtrend is abruptly broken by a sudden new higher high. This structural break is your definitive green light. It proves with real-time data that institutional buyers have actually stepped in to defend the higher timeframe discount level. Precision entries require equally precise risk management. The OTE framework naturally provides a mathematically sound, non-negotiable location for your stop loss. This graphic shows the setup's rigid risk profile. Your stop loss is placed marginally below the impulse leg's 100% origin. If price crosses it, you exit with minimal damage. Profit targets start at the original 0% high, extending to the negative 27% Fibonacci extension. The ICT Optimal Trade Entry filters out the noise. It forces extreme patience, keeps you out of premium pricing, and mandates asymmetric risk-to-reward setups. You can practice this step-by-step blueprint right now. Open a free FXNX demo account to master this exact setup in a live market simulation without risking any capital.